Hi there. I was asked in a video comment earlier today, what about certificates of deposit? Well, at the time I couldn't answer that because here in the UK we don't have them, I thought, but we do, just under a different name. So it turns out I can actually answer that, and I thought it was worthwhile doing a short video, so here it is. Certificates of deposit, don't do it! Why is that? Well, certificates of deposit are always touted as the most secure way of investing, because what you do is you give a bank or another financial institution a certain amount of your hard-earned cash, such as $5,000, for a fixed period of time to maximize your returns, which is what you're after. If it's in pensions, you're looking at 5 years, which is the longest term that they're currently available for. And traditionally in the past you've managed to get like 4% interest on these, 3% some places. Well, as recently as I think it was 2012 they dropped down to 3%. Nowadays they're sub 2%. So when your next crop of these certificates of deposit rolls over and becomes due, instead of renewing them, I would suggest that you do something else for your money. And why is this? Well, traditionally they've been touted as a very secure way of investing. Now this is true if you believe in the sanctity of the dollar, if you're American obviously, and most of my viewers are. Now the problem being that if the dollar's on a roll, as it is just at the moment for a little while, then certificates of deposit make sense, because although the yields are low, your money is not losing its value. However, should the dollar situation reverse and the dollar go back into decline, which it was until a few months ago, then it's an entirely different kettle of fish, because the chances are that your money is actually really losing its value. Now another reason why people say it's secure is that it's insured. The FDIC guarantees that your deposit will be safe, but I've covered this on another video. The FDIC has nowhere near enough money available to it if there is a major systemic problem with the financial industry, as occurred in 2008. Now, tellingly enough, if we look at who uses CDs or certificates of deposit, wealthier people have always tended to invest more in CDs. And there was a survey in 2010 which basically said 21.5% of people with income levels in the top 10% held CDs. You might think, wow, that's quite a few. Well, it's a greater percent than any other income level, but prior to 2008, nearly 28% of that group held CDs. Now, that change just shows you that the wealthy are starting to think that in a financial crisis, if there is financial problems, CDs are not a good thing. And who am I to agree with someone who's worth a few $billion? I wouldn't disagree with them at all. I would say that the next time that you have CDs that mature, take your money out and do something else with it. Because at the end of the day, I mean, I've got a bit of a thing against banks anyway, but at the end of the day, banks only offer these products for one reason, and that is that they can make money on it, and a considerable amount of money, because they pass on to you this 2% or less than 2% as it is now. But what are they really making on it? You don't know. Might be 20%. And I would suggest to you it's worth your while putting in a small amount of effort to try and make an income from that money, rather than letting it stay static and earn a tiny amount Yes, there's risk, but there's risk there anyway. You always thought CDs were secure. I don't think they are anymore. Anyway, I hope you found this all entertaining and useful, and if you have, please like and subscribe and share and do all those wonderful things, and I'll see you again soon. Bye.
Oh, hi, Arduinotronic. For gold news, finances, opinions, art, and just loads of interesting crap. Alright?